Okay, now here's a simple way of, or simpler, in fact, of approaching the market and the smart money concepts with using, entry models, like the lower time frame entry models, along with the higher time frame, gaps and efficiencies. Okay, so today's Thursday. I'm going over the past 3 days, starting with Monday. This is the beginning of the week, all right. And like instead of running in replay mode, I'll just show you when it went down. So this is all of these gaps are color coded, all right. So the 4 hour gaps, which I hold very important, I really like the 4 hour time frame. These are the purple ones, and the green ones are the 1 hour gaps. Okay. I have the daily gaps haven't really posed any validity this week, so that's why you don't see it here. But just so you guys know, at the top right of the screen, you'll have layouts. I like to have layouts. I'll just show you. So if I want to go to a 4 hour chart, I just go here, right? So it's not all it's not cluttered, right? So I have the 4 hour gaps there. I have the 1 hour gaps like this, and then I have my dailies like so. Okay, but let's go back to the 1 minute. All right, so we were on Monday. All right, so you always want to add some structure to your chart, and like my formal structures are pointing out these gaps, especially the 4 hour, 1 minute, 15 of val as well. But just for the sake of this video, this is what I have up here. I'm sorry, this is Monday. All right, so we're gonna start with the Asian range. I always, mark out some structure. So this is the Asian range right here, the orange boxes. All right, as you see, I want to show you first the market makers buy model that's here. Okay, where we had price trickled down, creating this low resistance liquidity. All right, as it's going down, all of these swing highs here are liquidity targets. Okay, and in which when price dipped into the 4 hour gap here, this was the lower day. I like to enter trades at after 10 o'clock, so we have that 10 o'clock 4 hour candle. So you'll notice that I do not enter early, even though price did what it needed to do here. We came all the way down here to about 2 standard deviations. Nice sign to that we're gonna go for longs if price comes this deep into discount on in the London session. All right, but I was asleep at that time anyway. But we go here. All right. Now we have when market opens. I have a bullish bias. So of course, when price shoots up at market open, I was a little disappointed because I'm like, okay, price got away from me. I won't be able to really find a valid trade today. But just my luck, price came all the way back down, back to even lower that it got to prior to the market open. All right, so price starts to go up here, and I'm looking at after it takes out liquidity, previous day liquidity, price, it goes above an inversion here. As you see here, this was my sign to get in, and I always pay attention to the first presented fair value gap. This is the first fair value gap after market open. So the earliest would be 931 because we kind of throw out the 930 candle, but we just had a whole combustion of volatility and upward momentum here in at market open. So a lot of there was just a lot of displacement. Okay, but anyway, after we come back down, we have this inversion right here. This is why I got into the trade. Obvious target at these external liquidity level. All right, price came up a little bit after it goes over these gaps right here, consolidates a bit, and then goes all the way up to the target. Okay, so my entry model was the inverse fair value gap where price came down. We have a little bonus of SMT where at this time ES took this low. right? The 550 low, but as you see, NQ did not take it. So that's always a nice bonus. As you see, the entry model, like the reversal setting up, and one of these, one either NQ or ES, one takes it and the other one doesn't. That's a divergence. So it's a really nice bonus when you're entering your trades. All right. Okay. Now the next day, Tuesday. So of course, once again, we have our structure of the Asian range. Now, once again, we have this market makers buy model, where all of this buy side liquidity is being formed here, engineered. Once again, about 2 standard deviations of going into discount. So once again, I'm looking for longs, but not until 10 o'clock. We get those longs, come market open. We have our price going back up, and by just after market open, 9:22, before market opens, in fact, all this liquidity is taken. So as I said before, I like to get into trades after 10 o'clock. So we have that 10 o'clock candle. So we have this first presented fair value gap at 9:44. Of course, I'm waiting for 10 o'clock. Like I said, this is the 4-hour gap that price dipped into. It filled all of that, came out of it. Now, come 10 o'clock, we go all the way down to the first presented fair value gap. And while this would be the best entry, I always wait for candle closures. Okay, so I waited for the candle to close. We had and it was really bullish as going into here, and we have like this hammer, not really a hammer, but the buyers bought the dip up right here. So I entered this trade here, and was really liked it that price closed on the other side of this 4-hour gap up here. And my target was here because that was the next area of liquidity. I don't want to lose you and go to a 15-minute chart, but let's just go over here. Man, it's a ways back, but here we go. Just to show you, this is why my target was here, because that was the next area of liquidity. All right, let's go back now. And that was my Tuesday morning trade. Okay. Now the next day, Wednesday, once again, we have the Asian range here. Now, unlike the previous 2 days, Tuesday and Monday, we didn't have a market makers buy or sell model. All right. This is just rangy up and down. All right. Now, the first side that it takes is buy side liquidity. Okay, so if it takes buy side liquidity, that kind of gives me a selling bias. But now it took buy side, and then because of news, like I don't know, ADP payroll or something like that. Not NFP, but ADP payroll. Something 8:15 news. It shoots down and now takes the lows. So, the area, the part of the range that price is in, that's what makes me nimble. Although I'm overall bullish in the market, I take heed to where price is in the range. So if price stuck up here, right, and didn't take the Asian lows yet, I would have been, selling bias. But being that now price was down here, I was now bullish bias. Okay. And then at market open, once again, price now goes to the highs. So if price stayed up here, being nimble, I'll be looking for sales. But then, of course, because I wait till 10 o'clock, price now comes down here at 10 o'clock and perfectly takes these lows. Like it's like this swing low was engineered just to be taken by price at 10 o'clock. Okay, giving us a nice 10 o'clock low here. All right, and breaking this low, we got this gap here. We even have another gap here, but this is the gap that just stood out to me. And trading, it don't have to be one way. You could have taken this lower gap, You could take this gap. You could even take this gap up here. It's all on you. You know how you formulate your trades. Of course, you want to keep your stops. You want to give it room, but not too much room. That's like you don't want a 50. You don't want a 50 to 100 point stop, or maybe you do. But if you have so high of a stop, you can't put up too many contracts. I wanna put up enough contracts where if I lose, it's just a paper cut, but I don't have to have my trade run 100 points, 200 points for my day to be decent. Okay, so that's just a talk that you have to have with yourself in order in what risk you're putting on the table. But anyway, we get into this trade off an inversion. Okay, that's just what presented itself. And with these entry models, I like to. Some people say it's you want to stick to one, but if you stick to one entry model, you're not gonna always get the best price, because maybe a breaker would have presented itself good. Maybe you'll see and you'll notice the previous 2 days, if you turtle souped during London session, that would have been good for you if you was up. Or maybe you want to wait for more confirmation and change the state of delivery. So it's all on you. You see what the market presents for you, and that's the entry model you use. Okay, I don't think it's hard to decipher between the different entry models. But anyway, we got this. Of course, I'm targeting this area of liquidity. All right, but it was as opposed to the other 2 days, Tuesday and Wednesday, Tuesday and Monday, price didn't just shoot up after this first presented fair value gap, which, as you can see now, it has some importance. Okay, price started to go down, so I got out mid fair value gap here. First presented fair value gap. This is a strategy all in itself. Okay, but price did this high did get taken later on in the day, in the afternoon, but who's trying to hold a trade for that long? All right, so hopefully this helped you guys out on using these entry models, waiting for liquidity to be swept, how I navigate the market, structuring your trade, seeing what price does from your Asian structure, and using these higher time frame gaps like the 4 hour and 1 hour. Okay, if this helps you guys out at all, please subscribe, ask any questions if you need in the comments, and I'll talk to you soon.